What's up, traders? This is Agent Double O Woe here. Let's get down to brass tacks. Today, Tuesday, October 11th, I made $6,527. This is to show you from my trading platform. I basically made calls on TQQQ this morning. Over the last week since October 3rd, I've made $22,375 on these various options contracts. Over the last 2 weeks, $30,917 on these options contracts. As you see, the vast majority are wins. There are a few losses. Over the last 3 weeks, $34,907. And what I'm going to show you today is going to absolutely blow your mind how I am executing these trading strategies. And they are, to summarize, basically the use of exponential moving average, EMA, and simple moving average, SMA, that are from higher time frames. And I'm using them as support and resistance lines. And you're probably wondering, how in the world are you doing that? So let's get right down to exactly how. Okay, here's an example of TQQQ from this morning. Let's get some orientation out of the way. You see 4 screens right now. The 1 minute, 5 minute, 30 minute, 65 minutes. Okay. Within these higher time frames, let's just take the 30 minute here. This one. This is the MACD. This is the rate of change. This is the Chaikin Money Flow. This is the RSI, Relative Strength Index. All right. Now, let's look to the left-hand side of your screen. This is the 1 minute time frame from this morning, okay? From this morning right up until about noonish. Okay. This first gray bar is actually taken from the 5 minute simple moving average, which is right here. Okay, I drew that line right here. And this is the 5 minute EMA from right here, the red curved line. And this line, this horizontal line, is from the 30 minute SMA that is right here. Now, I want you to look at how the price on the 1 minute with absolute precision bounced in between these support and resistance lines perfectly. Look at this. The first surge up that met the 5 minute SMA line. Look at this. Perfectly curved, not curved, but hugged the line before surging up to the 5 minute EMA line. Look at that. And then failing at the 5 minute EMA line, coming back down and touching the 5 minute SMA 20. Excuse me. All right. Now, and let's once again look at how it's traversing these levels, which I call them dynamic levels, right? Because as you know, SMA, EMA lines, they move, right? They're just the over the various number of periods that you specify. So these are dynamic lines. So actually throughout the day, I kind of adjust these lines. Okay, I do adjust them. They're not static. Just like the EMA and SMA lines are not static the whole day. It's just not a straight line, right? So, but just look how the data just perfectly moves through these lines and comes back and touches them, moves up and touches them. Okay, so you're going to see on this next slide, which was the afternoon, even more contact points, precise contact points. Okay, now I want to call your attention to how did I know to get calls. I actually got calls right here. I got it right here. That's how I knew to get calls, right? I didn't get it here. So what I saw, I want to call your attention to the lower part of your screen here. Excuse me. On the 5 minute. On the 5 minute chart, this is the RSI. Right here was the moment it surged up the blue line, came back down and made a higher high. That was above the red line, the red 30 line on the RSI. That's when I knew. That's it. That's when I knew this was the bottom, because within 2 minutes I saw this huge green bar coming up, and I knew it. That's when I knew. Okay, and that's when I got my calls. That resulted in the $6,300 profit. The next slide, I will show you how I knew when to sell, but this is only the morning hour. Okay, so that's how I knew when the bottom was. You'll start to see. Here's a good example. Look at the lower right hand side. Look at the 65-minute time frame. This gray shaded vertical bar, that's pre-markets, right? Before opening bell. Look at that. Higher lows, higher lows, higher lows on the 65-minute. That's how I also knew, oh, it's going up. It's going to go up. I just need to let it bottom. You need to let it first bottom, come up to touch either its own 1 minute S 20 period SMA right here, or its own 1 minute 50 EMA here, which it did. But you need to let it, give it a chance to back test. You have to. You can't just watch this surge up and then, okay, that's my entry point. No, you have to let it back test. Okay, you got to let it back test back down. And what I like to do to force me to wait, I will let it back test on the 5 minute time frame, which was right here. This here is equivalent to that here. Okay. As soon as I saw it back testing and it was a higher low, I knew. That's when I knew it's going to go, because the 65-minute also showed that. That's another higher low right there. Okay. I use the 65-minute time frames and even the 30-minute time frames to give me that sense of security that it has support, meaning it's not just going to, in this example, head south on me. It's going to go up, because the 65-minute and the 30-minute time frames show that. See, it bottomed here and then it started to curl up. That's how I knew that's the bottom. Okay. So let's go to the next slide. This is the afternoon. I actually did sell up here, right up here. So you're wondering, well, how did you know to sell up here compared to right here, or even, yeah, right here versus up here. Okay. So, but before I get into how I knew to sell, let's cover, this is the afternoon hour, the noon hour. This is the 30-minute SMA 20 correlated right at this point. 30-minute, here's the 5-minute EMA 50 correlated right to this point, right? So here's the 65-minute SMA 20 correlated to that. Look at the price action. Look at this price action. It is perfect. Up, down, touches the 30-minute SMA. Excuse me. All the way back up, comes back down, and back tests 65-minute SMA. Look at that. It tests it twice. Once, twice. And then it goes up, and then it comes back down under the 30-minute EMA 50. And look what happens. It's under the line, and it can never get back above it, and then it fails. So if you look at this at a high level, the price perfectly moves back. This is what I mean by, at any given time, one of these time frames will dominate. The 5 minute, the 30 minute, the 65 minute. One of these time frames will dominate. So what I do is, well, then I'm just going to show all three of these time frames simultaneously, right? Here's the 5 minute, here's the 30 minute, here's the 65 minute. Okay. Now, back to my original point. How did I know when to sell? Look down here in the low at the RSI again. Do you see that? That is a lower high than the previous one. That is a bearish divergence, negative divergence, because up here was a higher high. That's how I knew it is time to get out, right? You got to get out. So I look for the divergences along. You can also look at the divergences. Here, let me go back a slide. How I also knew that this morning was going to have a higher high. Look at the MACD. Look at this. See how it's starting to curve up. See that? Ever since yesterday, before today's pre-market. See that? It's going up, 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 up. The RSI, relative strength indicator, up, 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 up. Of course, TQQ is going to go up. You can have every confidence in the world. It is going to go up. It is not going to crash on you. But it did crash this afternoon, however. Right here, actually. It was at this moment right here. Here we go. It crashed. You can also see that it's coming. Look at the relative strength. Lower, 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 lower. You can see it's coming. You can see that it's coming. Okay? It's the same. Look at this. Here's the cliff right here on the 30-minute time frame. Well, guess what? That cliff lines up with this low point right here. It's already losing strength real time and across larger time frames, across the 5-minute time frame and the 30-minute time frame. You notice on my 1-minute time frames, I have none of these indicators because the 1 minute is just too fast. It's too much interference, too much noise, and so I don't want to react to everything that I see. I want to smooth it out, the noise to smooth out a little bit. So I look at only the 5-minute to force me to use the 5-minute indicators and the 30-minute and the 65-minute for that matter. But I use the 5-minute as far as the real-time decision making, right? And I use the 30-minute and the 65-minute to give me a sense of security that my decision is sound, right? It's more higher level, the 30-minute and the 65-minute. Okay. So if you want to follow me on Twitter, I post each morning the outlook of what I believe the market could be doing today, and I post real time out there my trades that I placed. And here's an example of that. That was today. As you see here, 6 hours ago, I posted the profit of $6,411. Okay, and I'm actually posting my actual options contracts, right? So follow me on Twitter if that's of interest to you. I post every morning. And if you liked this video, give it a like, a share, please subscribe, or be notified when I post my next video, which will probably be tomorrow. And that's all I've got for you today, guys. Agent 000 signing off.